Hey everyone, welcome back to Corporate Decoder. Today FSI just filed an 8K about a material agreement, and I am seeing a potential dilution event about to happen. Quick note, this is not financial advice, just my take on public filings for educational purposes. Flexible Solutions International is raising a significant chunk of cash through and at the market offerings, and we need to understand what that means for shareholders. Flexible Solutions International, the company behind water conservation products, is the subject of this report. They are based in Alberta, Canada, and trade on the NYSE American under the ticker FSI on any given day. This ticker is usually trading around $6.25, and their market cap is about $80 million. They have 78 employees. This filing is an 8K, which is a report public companies use to announce major events that shareholders should know about. The big event here is the company entering into what they call an ATM sales agreement. ATM stands for at the market. So on the 30th of June of 2026, Flexible Solutions International Incorporated, or FSI, signed a deal with Bancroft Capital LLC. Bancroft Capital is acting as the sales agent. What does that mean? Well, FSI is going to be selling its own common stock, the regular shares of the company that you and I can buy on the open market. They plan to sell shares worth a massive $18.5 million. Now, this isn't just a handshake deal. The company already has a registration statement filed with the Securities and Exchange Commission. Think of this as a pre-approval to sell stock. This filing states they have an effective registration statement on Form S-3, which was approved back in March of 2026. This allows them to offer these shares. Let's talk about the cost. FSI is going to pay Bancroft Capital a fee of 3% of whatever money they raise from selling these shares. So out of that $18.5 million, about 3%, which is roughly $555,000, will go to Bancroft Capital as a fee. On top of that, FSI will also reimburse Bancroft Capital for some expenses, including legal fees, up to $30,000. They will also pay Bancroft Capital an additional amount, not more than $5,000 each quarter, for ongoing expenses until the offering is done. This ATM sales agreement is a pretty standard contract. It includes promises from FSI, conditions for selling the shares, and also how both the company and the sales agent are protected if something goes wrong, especially related to securities laws. This agreement is filed as an exhibit, meaning you can go read the full document if you are really curious. Now, like most corporate documents, they include a section on forward-looking statements. This is the legal disclaimer that says some of the things they are saying might not actually happen. They are based on current expectations, but actual results could be very different. They warn investors to be careful and not put too much trust in these forward-looking statements. They specifically mention that the company is not obligated to update these statements if things change, unless the law requires it. This is pretty standard language, but it is always a good reminder that the future is uncertain. This filing also includes what is called an interactive data file. This is basically a digital version of the financial information that makes it easier for computers to read and analyze. It is embedded within the document itself. Signing off on this report is Daniel B. O'Brien, who holds the titles of President and Chief Executive Officer of Flexible Solutions International. This is the person ultimately responsible for the company's disclosures. So, what is the story here? Flexible Solutions International is essentially telling the market that they need cash. By using an ATM offering, they can sell shares gradually over time as the market allows, which is often seen as less disruptive than a big one. Time sale of stock. However, offering $18.5 million worth of stock means a lot more shares will be out there. If you own FSI stock, this means your ownership stake could become a smaller piece of a bigger pie. This dilutes your percentage ownership. Looking at the research context, there have been recent headlines from Stock Titan and TradingView on the 1st of July 2026 about this $18.5 million ATM stock plan. This aligns perfectly with the filing date. It suggests that this plan was in motion just before or right as this filing happened. The company's market cap is around $80 million, and an $18.5 million offering is a significant chunk of that, about 23% increase in potential shares. That is a substantial dilution if they sell all of it. Historically, companies that do large dilutive offerings like this can see their stock price come under pressure. Think about companies in similar situations. For instance, when Bed Bath & Beyond was struggling, they resorted to multiple stock sales to raise cash, and each time it put more downward pressure on the stock price. Holders often had to see a significant drawdown, sometimes 20 to 30% or more following these types of dilutive equity raises, especially for smaller companies. While FSI is not in bankruptcy, This is a clear signal that they are looking to bolster their balance sheet, and that comes at a cost to existing shareholders. The risk I am watching is how much of this $18.5 million they actually sell and how the market reacts in the short to medium term. What I am actually looking for is how this capital injection will be used to drive future growth that can offset the dilution. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Also, check out our Discord community.